Whether you're in the early stages of investing, getting ready to retire, or planning your estate, you need a financial planner who will guide you on a clear path with honesty and transparency. Shoreline Wealth Management understands that you're more than your money, and they strive to help you realize your best life as they align your finances with your goals. Best of all, Shoreline's straightforward approach will include you in the process. Shoreline Wealth Management is your financial anchor, committed to helping you weather life's storms. Visit ShorelineWealth.com for more information today. ShorelineWealth.com. Securities offered through LPL Financial, member FINRA SIPC.
Welcome to your Financial Wake-Up Call. I'm Vin Avenue. Dave Crossan will guide you through the Financial Wake-Up Call podcast today because it is for you. So it is your Financial Wake-Up Call, talking about different things each week on this podcast, letting you have some relief, some relaxation as Dave guides you on this financial journey of your life and your career. So lots to discuss each week, Dave. So Dave, what is on your mind this week? What do you want to let the people know about from Shoreline Wealth Management?
Thank you. Well, this is a big topic, and it's something where people have a tendency to wait to the last minute to address it, look into it, and usually it's too late. And what I'm talking about is long-term care. And I see it too many times, Vin, where somebody will be in their 70s and 80s, and unfortunately they have to go to a facility or they need care for somebody to come to the home to take care of them, and they don't have the insurance, they don't have a resource, if you will, to be able to pay for it, and it can wipe somebody out financially. And so here's what I'm going to do today, Vin. I'm going to talk about long-term care, to introduce the topic of it, what it actually is. I'm talking about long-term care insurance.
Okay.
And this is something where people really need to be looking into this in their 50s, just to get an idea of like the insurance involved. I'm not saying you can't get into it sooner than that,
right?
Or a little bit later. It's just people have a tendency, they're in their 70s, they're looking into it, where that, 50 into 60, that's a time where it's like, you know what, we got to really evaluate where you're at, because unfortunately what a lot of people have a tendency to do is they'll self-pay, and like I said before, it could financially completely wipe them out. So with long-term care, in a nutshell, what that is for this insurance, or to have this insurance to qualify. First of all, you have to qualify for the insurance. This is something where with an insurance company, you have an agent, you qualify to get it. And there's a couple different types of insurance, long-term care insurance that is, and I'm going to go over that. But if you have long-term care insurance, to be able to get its coverage or to utilize its coverage, it would typically be your inability to do two activities of daily living. And what is that? That's bathing, dressing, using the toilet, getting in and out of bed, eating, and issues controlling your bladder are 6 different items that if you can't do 2 of the 6, typically that's when your long-term care coverage would kick in. And also, too, Vin, this typically wouldn't kick in until there's a 90-day period where you don't have the ability, or there is an inability for you to do these daily functions, 2 of the 6 that I just mentioned. Now, let's talk about 2 different types of long-term care. So, Vin, I'm going to throw this out to you.
All right.
Let's talk about insurance for the home. And let's say you have insurance that if there's a fire, then you would pay your deductible and you go ahead and you have coverage to whatever the coverage is for the repairs to rebuild the home for the damage. I'm just using fire as an example. It could be something else happens with the home that you're insured for.
Right.
Now, what if there isn't ever a fire or this damage to your home? Does the insurance company show up years later and say, hey, Vin, well, you didn't have a fire. There wasn't damage to the home where we had to pay out any sort of coverage. So here's a check for all of the money that you paid us over the years, and thank you very much. Do you think that's going to happen?
Probably not.
Okay. So basically, you're paying for a coverage just in case something happens. So I'm utilizing the example of it could be home insurance, auto insurance if you have some sort of accident that there is coverage. But again, if you don't need that coverage or don't utilize that coverage, you're not going to get a check down the road saying, you know what, you paid all this money over time with your premiums and here's your money back, or here's a payment back for money or coverage that you didn't utilize. Okay.
Right.
And for option number 1 with long-term care, it's very, very similar. Notice I said very, very. It's very similar.
Aha.
So long-term care where you pay into it, similar idea, and I'll just make this up. Let's say it is $200,000 of coverage, and you're getting this coverage, you have this coverage so that if you qualify, meaning you're unable to perform those 2 daily functions, typically for a 90-day period, the insurance would kick in and you would have it for either a facility or in some cases you could have somebody come to the home to take care of you. And assuming that you qualified, it would pay for that service, for that care, for that help that you need. Now, again, this first option, if you don't utilize it or you do not need it, typically it's gone. In other words, you've paid into something for your care, but if for some reason you didn't need that long-term care, well, you've paid into something that you're not getting back. Now, of course, it was something that you wanted in place, having that insurance so that you didn't have to go after or utilize your other resources, your savings, your investments, your retirement accounts. You had this in place for that purpose. So typically when it comes to long-term care, and the reason why people either hold off on doing it or do not do it at all is they don't want to pay into something that they may not need. And unfortunately, Vin, typically with any couple, usually one of the two of a couple or of individuals living together need that coverage. So
right.
50%, and in a lot of cases, a little bit more than that, somebody's going to need it, if not both people in this situation. So the hope that you're not going to need this coverage can be devastating down the road, that if you do, now, like I said, you're going after your liquid monies, your investments, your retirement accounts to pay for it. So again, option number one with long-term care with an insurance company is you pay into having the coverage. And if you need the coverage and you qualify like we talked about before, then it's there for that purpose. But if you never utilize it, well, it's gone. In other words, it's not something where you're getting that money back, money that you've paid into it, money for the coverage that you had had. And that's, again, another reason why a lot of people wait too long or just do not do it, hoping that they're not going to need it. Now, Vin, this is very smart by the insurance companies out there. The insurance industry came up with another way of having long-term care coverage, but if you don't utilize it or only a portion of it, there can be a portion of insurance that is paid out to your family. This can be very appealing for a lot of people. So let's talk about that. So for a lot of insurance companies now, what they're doing is with permanent insurance, they offer a rider that you can tap into this coverage. Let's say, I'll throw out an example. Let's say you have a death benefit. I have an insurance policy with an insurance company, a whole life policy that is offering, or I should say I qualified for a $300,000 death benefit.
Sure.
So I pay my premiums, and upon my passing, this $300,000 would go to my family as part of my legacy. Now, if this same insurance company offers a rider that not only do I have this coverage, but having the ability to tap into that death benefit while I'm alive for long-term care. And so then what they typically do, and again, I'm just making up some numbers, let's say it's $300,000, that I have the ability each month to pull out a certain amount. And let's say it's $8,000 or $10,000 a month. What that does, it enables me for my long-term care, again, same qualifications that I would have to not have the ability or inability to perform 2 of the daily living functions of an individual, typically for a 90-day period, that if I qualified, I could tap into this death benefit and now utilize that for my long-term care. And again, like I said, there's a certain amount per month that you can pull out. But again, maybe I go to a particular facility for this care. Maybe it's a situation where I have somebody come to my home, that I'm living at home. And for a lot of these policies, that coverage will pay to have somebody come into the home to provide you with this coverage. For a lot of individuals that I speak to, they really like this way of doing long-term care. And the reason they like it is they're saying to me, well, David, you know what? I know I need it. I know I should have it. But I feel so much more comfortable knowing that if I do not utilize it, or I only utilize a portion of it, the remaining amount goes to my family. So for example, that $300,000 coverage I was talking about, let's say I only utilize $100,000. Well, there's $200,000 that would pass on to my family. Or maybe I utilize the whole thing. I have that. So what's happening, instead of going to my savings accounts, my retirement accounts, my investments to pay for this coverage, I now have the ability to utilize this life insurance policy that's doing two things. It's providing a legacy for my family. In other words, I pass away, that death benefit would go to my family, or I have the ability to utilize some or all of that coverage for my long-term care. Vin, the reason I wanted to bring this up is this is so important for people to start looking at long-term care earlier in their lifetime than later. And like I said, in your 50s into 60s, you really need to focus in that direction. Obviously, the earlier you do it, the better pricing or less expensive it would be for you. But when you get situations where somebody is, instead of in their 50s and 60s, in their 70s and 80s looking to qualify, you're not going to get the coverage, or it's going to be very limited and not be helpful for what you're trying to do. And the worst part about it, it would be very expensive for this coverage. So I wanted to bring this up. It's so important. It's a conversation that you need to be having with your financial advisor. Insurance, whether it be just plain life insurance or what we're talking about with long-term care, people have to look at insurance as part of their investments. It's one of those things that people don't look at as their investments. And when I say investments, it's part of their assets, I should say, meaning upon your passing, this benefit then goes to your family, and it could be utilized for income replacement if I pass on and I have a family and I need to pay for a mortgage or whatever the situation is, or for just different expenses that I have for college for my children. But also in this case that we're focusing in on long-term care, you have to look at it as, even though you don't have it, the usage of it in the sense of like other aspects of your life or spending, knowing that you have your long-term care covered as well as the legacy planning all in one opportunity or in this insurance policy, I find a lot of people are a lot more comfortable going in that direction rather than paying into long-term care. And if they don't use it, they feel like that's money they paid into something that they didn't help them, and that's money that they could have put in a different direction. Just wanted to bring this up, and very important. It's a great conversation to have. And again, the earlier you start the conversation, the long-term care, the better. When you're getting into your 70s and 80s, at that point, it's either too expensive or the coverage isn't available for you. And there it is, Vin. A quick little talk about long-term care and those two different options that people have. And here's the other thing, Vin, I want to just put out there. For people that have life insurance policies, let's say they have permanent life insurance policies, there may be the opportunity to take what you already have and move it into a policy that does offer this long-term care. So people might be listening right now and thinking, well, David, that sounds great, but I'm already paying into a permanent life insurance policy that only provides for a death benefit for my family. Well, there may be the opportunity to transfer that policy into one that now we can provide and add on that long-term care option.
There you go. It's a lot to digest.
Yes,
a lot
it
for
is.
people
It's a big conversation.
to consider.
It's very important to talk about it.
Yeah.
The earlier, the better.
So, Dave, for people who want to learn more and try and figure out next steps for themselves or for their family and everything along those lines this year, how can they get in touch with you at Shoreline Wealth Management to, at the very least, go over all this?
And one thing that we offer at Shoreline Wealth Management, especially when it comes to life insurance policies, is a review of those policies. For a lot of people, they have insurance. They set it up many years ago. They don't know exactly what they have. In a lot of cases, we may be able to provide coverage that may save them some money and give them these extra protections like we're talking about here with long-term care. But people can reach out to us at 732-902-7880. Of course, they can go to shorelinewealth.com. And then come visit us in Manahawkin and Manchester.
There they are. Take a drive down to Manchester or Manahawkin. Go visit Dave at Shoreline Wealth Management. And discuss anything that Dave brought up here on the podcast or prior podcast or anything else on your mind financial related, so you could try and help make the best decision possible for yourself and for your family as well, go to Shoreline Wealth Management. Go see Dave Crossan. Dave, this was another good podcast.
Thank you. I enjoyed it, and it's so important. So please reach out to us. Let's have that conversation.
Tune in next Monday. And by the way, you could all check out all the podcasts, all your Financial Wake Up Call podcasts, Dave Crossan. Just go back into Spotify, Apple Music on 94.3 The Point, and play it over and over again. And stay tuned.
In your car?
Because next
having
Monday,
your coffee? Sure.
Next Monday, there'll be another podcast. So stay tuned. Financial Wake Up Call podcast right here, 94.3 The Point. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. This information is not intended to be a substitute for individualized legal advice. Please consult your legal advisor regarding your specific situation.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.
Whether you are in the early stages of investing, getting ready to retire, or planning your estate, you need a financial planner who will guide you on a clear path with honesty and transparency. Shoreline Wealth Management provides clarity through the complexity. Shoreline's system is straightforward. They will understand your financial circumstances, identify goals, analyze current plans, and customize a path to position you to reach your goals. Shoreline Wealth Management is your financial anchor. Visit shorelinewealth.com for more information today. Shorelinewealth.com. Securities offered through LPL Financial, member FINRA, SIPC.
Let's face it, investment concepts and financial planning can be very intimidating and confusing. Shoreline Wealth Management addresses that feeling head on. Their goal is to educate you while offering financial advice without buzzwords and jargon. Shoreline includes you in the process and makes you comfortable every step of the way. Shoreline Wealth Management is your financial anchor. Visit shorelinewealth.com for more information and start your financial journey with comfort and security today. Shoreline Wealth Management, with offices in Manchester and Manahawkin. Securities offered through LPL Financial, member FINRA, SIPC.